Hi again everyone, I hope you're all doing really well. I have done some more digging around to uncover a bit more information about what exactly went wrong with support.com and its merger with Greenidge Generation. In this video, I'm going to point out the red flag that I think was missed by many in the retail crowd in their enthusiasm for short squeezing the stock pre-merger. As well as discussing what went wrong, I think I can provide a bit of guidance for the small amount of cash shareholders will receive in terms of the excess shares that did not properly convert to Greenidge Generation holdings. I think there are a few teachable moments in this scenario that I think are worth reflecting on, so I hope you find this useful. Anyway, let's get into it. So to spot the two red flags immediately, you need to go have a look at the details of what was being voted on last week. To do this, you need to revisit the form DEFM 14A support.com definitive proxy statement relating to the merger or acquisition from the 10th of August. This was quite a lengthy document that contained the details of the merger that was being voted on last Friday, the 10th of September. However, the crucial information that we need to look at can be found in the first few pages of the document. In fact, it is summarised in the welcome letter. Firstly, it highlights that shareholders of support.com will make up just under 8% of the new entity and that they will have reduced voting power as their Class A stock will only account for about 0.9% of overall voting in the company, with pre-existing shareholders in Greenidge controlling 99%. Now, I don't know if you recall or saw it, but I was saying in my video yesterday about the remaining Class B stocks having 10 votes per share to the 1 vote per share of Class A stock being the support.com shareholders. So support.com shareholders are very much the second class shareholders in this new entity. The other red flag that can be seen in this welcome letter is the methodology for converting support.com shares to Greenidge. Reads, assuming a price per share of support.com stock of $7.94, which is the VWAP for the 10 trading day period ending on the August 9th, 2021, and that the fully diluted amount of support common stock is 25 million shares, then the exchange ratio would be 0.117. Note that this is only an illustrative exchange ratio and the final exchange ratio will be determined pursuant to formulas in the merger agreement and announced immediately prior to the closing. This was the methodology for converting shares, but they did give this indicative price here. So the value of the stock was based on a 10-day performance. So if we look at how the stock performed before this 10-day period, we can see that it was a period where there is a high point of about $9.40 and our VWAP never really goes above the $8.50 mark. And in this same 10-day period on the low end, we hit a low price point of around $6 with the VWAP getting as low as $6.50 on 2 occasions. So our likely valuation of support.com stock for this merger is going to come from this period here. So that trading period does not stack up very well, especially when you consider the last 10 days of trade before the vote where the stock hit almost a high point of near $60, and even the finishing price just before support.com ceased to be the listed company, it was at $11.80, which is still above this range by quite a lot. Although it is worth pointing out that the $11.80 closing price would be where the stock would be priced following the reverse stock split calculation when GREE began trading the next day, hence why the stock had a starting point above $100 on brokerage apps. The main point I'm trying to make here is that $11.80 is clearly going to be far away from whatever price the merger is settling on for support.com stock. So if you dig deeper into the lengthy document, it does go on to confirm that $7.94 is the final price that they use, even though after reading that first part of the letter you might think that there could be a bit of a change. So anyway, $7.94 is far from the $11.80 mark that the stock closed at and is ridiculously far from the $20.80 the stock closed at on the day of the vote. In one of my previous videos I mentioned that I had seen the figure of $7.54 somewhere but couldn't recollect where. Clearly my dyslexic memory was playing a trick on me, but it must have been reading something in relation to this proxy announcement. Anyway, based on the $7.94 valuation for support.com, that puts the opening price of Greenidge Generation at $67.86, which is well above the last closing price for GREE after 2 days of trade of $43.50. So the stock is still missing that price point by about 50%. Anyway, this is a mile away from what GREE would be valued at based on an $11.80 closing price for the last day of trade for support.com, which puts the opening price of Greenidge Generations at $110.86, which shows why the stock had such a terrible debut trading, falling by about 58%. Now, for those who were shorting support.com, had they got in at $20.80, the closing price for support on the merger vote day, they made a mozza when you take the current share price of Greenidge of $43.50 and the fact that they were effectively shorting GREE from $177.78 per share. They've done quite well. I won't do the calculation, but if someone happened to short from the peak price for support.com of $59.69 per share, that would be truly an upsetting figure to look at in terms of how much they made from this trade. I think all of this, as well as speculation around what would happen to the short's interest in the stock, really blurred the vision of retail investors. There was a lot of confusion and it was hard to find reliable information on how the merger would play out in terms of pricing the stock for Greenidge Generation. On another note, I dare say for those of you who held support.com and are wondering what the fractional refund amount you will receive on shares that didn't wholly convert to Greenidge Generation shares, I have an inkling that it will be based on the $7.94 rate. So given this gross mispricing, why did the vote go ahead and why did it vote yes? Well, the important point to remember is that insiders and institutions controlled approximately 65% of the vote. Therefore, whatever they voted on was going to settle the matter. By valuing the shares at $7.94, this represented a big upside on what the shares were when they were issued to many of these insiders, or even for those who had purchased the stock before the merger was announced, as the stock price was only $2.10 just prior to discussions around the merger had been announced. So $7.94 is a huge upside. It is worth noting that, again, I can't recall where I saw this, but I heard that 6 support shareholders actually lodged complaints to the SEC regarding the vote. Very hard to find this information there, but it's just something I recall reading somewhere. If you know about it, can you let me know in the comments, because it's pretty interesting and I'd love to see what was said in those complaints. Anyway, some final thoughts. So I suppose there are some lessons about doing your homework in these situations. It was a confusing time and it's why I avoided the stock. It seems that the vote, which, let's be fair, only ever really gets attended by major shareholders, was determined by the insiders and institutions who held the majority of shares anyway. You could make a strong argument that if the board members of support.com had equity stakes and voted in favour of the merger, you perhaps have an argument that they did not act in the best interest of their shareholders. You only need to look at AMC for some precedent, whose board this year took the action of not undertaking an equity raising as they knew it would hurt the shareholders through a dilution of their positions. So that could be a precedent for how a board should behave. However, if insiders control the company, the counter argument is that their best interests are the majority of shareholders' best interests. Anyway, it's an interesting situation. I wouldn't be surprised if there was to be some legal action around the fallout from all this, though I suspect not much will come from it, but really, who knows? Anyway, what do you guys think? Had you seen the $7.94 figure prior to the merger vote? Do you think there will be some follow-up legal action? Let me know in the comments below. Until next time, everyone, may the markets trade in your favour. Cheers.